40 facts about FHA loans. Fact number 1. HUD, which oversees and administers the program, has never set a minimum credit score for obtaining an FHA government-insured loan. Instead, HUD has given instructions to lenders, who are the ones who actually underwrite and fund FHA loans, on how to determine credit worthiness. These lenders do, however, set their own additional restrictions, also known as overlays. Some lenders fund FHA loans for borrowers with scores down to 530 or 560, while others require a minimum score of 640. Check with your lender about what their overlay score requirement is. Fact number 2. Down payment money for FHA loans can come from sources other than the buyer. Some acceptable sources are A. Gift from family member, B. Grant from state or local government assistance, C. Employer assistance as long as not a payroll advance. Fact number 3. FHA loans allow co-borrowers who don't plan to live in the property. These are known as non-occupant co-borrowers. Unlike with some conventional financing, the income and debt of all the borrowers is blended together. In this way, a buyer whose file is weak in some way can be strengthened by the presence of a co-borrower who's stronger. Fact number 4. The buyer can borrow money for their down payment requirement as long as the loan is secured against an asset the borrower owns. For example, a title loan against a vehicle, a loan against their retirement account, or even a mortgage against another property that's owned by the borrower are acceptable sources of down payment. Fact number 5. The FHA is not a lender, but a government-run insurance fund which protects lenders against losses involving default. As such, the FHA doesn't lend money. Fact number 6. There are two components to the FHA mortgage insurance: an upfront, one-time mortgage insurance which is collected at funding, and then an annual premium which is chopped up into 12 monthly payments. Fact number 7. A special FHA loan that allows borrowers to finance the cost of necessary repairs or remodeling at the same time they buy the home is the FHA 203K. The repairs can be completed after the closing of the home loan. Fact number 8. The maximum loan amount that someone can borrow with FHA insurance is limited from county to county. Irrespective of what someone qualifies for, they will not be able to borrow more than what's permitted in the county and state they're purchasing in. Fact number 9. The FHA has been insuring mortgage loans since 1934 and has backed over 37 million home loans. Fact number 10. Unlike conventional loans, FHA loans are possible for borrowers who are currently in the process of making Chapter 13 bankruptcy payments, or even payments on debts managed by a credit counseling service or debt management agency. A minimum 12-month history of timely payments is necessary. Fact number 11. FHA loans are not possible for purchasing investment homes. However, if a borrower once lived in a home that has an FHA loan and it's now an investment property, the existing FHA loan can be refinanced, known as a streamline, to a lower payment or shorter term. Fact number 12. FHA loans require that property tax and hazard insurance payments are included in the monthly mortgage payments. Borrowers cannot pay them separately. Fact number 13. There are special rules for FHA financing for condominiums. The condominium project itself has to be on HUD's list of approved condo projects. Some common issues considered by HUD for allowing a condo project to pass through include percentage of units occupied by renters and percentage of units with existing owners delinquent on HOA dues. Fact number 14. When calculating debt-to-income ratio, FHA lenders can omit student loan repayments if the borrower can document that the payments are deferred for a period of 12 months or more. Fact number 15. Subject to dollar limitations, FHA offers a program to finance 100% of the cost of making energy-efficient improvements to a home. Fact number 16. When a family member sells a home to another family member, the FHA program allows for gift of equity. Potentially, the buyer can actually gain ownership of the home without putting a cash down payment because the equity in the home is counted as the down payment. Fact number 17. Contrary to common misconception, the FHA loan is not just for first-time home buyers. Anyone can get an FHA loan even if they already own a home. Fact number 18. FHA loans can be approved two ways. 1. Automated by a computer that assesses risk, or 2. By a physical underwriter, known as a manual underwrite. In many cases, an underwriter will override an automated decision with his or her own decision. Fact number 19. There are no income or geographic limits for getting an FHA loan. You can't make too much or too little. Fact number 20. Non-permanent resident aliens from another country can get an FHA loan if they meet certain criteria. These include showing employment authorization from the U.S. Bureau of Citizen and Immigration and documenting the likelihood their right to stay in the U.S. will be renewed. Fact number 21. Borrowers who recently completed academic studies related to a new career can get FHA financing even without a 2-year job history if they can document via school transcripts and certification or licensing their new job and career. An example is someone who completed a 1-year nursing school course and became an LVN. Fact number 22. An FHA loan can be approved for someone who has no credit score and no traditional credit such as credit cards, auto loans, or finance loans. In such cases, alternative non-traditional credit such as reference letters for rent and utilities or proof of school tuition or cell phone service are acceptable to take the place of a FICO score. Fact number 23. FHA loans can be used to purchase multi-unit properties such as 3 or 4 units, for example. In these cases, the projected rental income from units can be used towards the borrower's total qualifying income. Fact number 24. A borrower who is presently delinquent on any federal debt is not eligible for FHA financing. Such ineligibility is determined through a database named CAVERS. Before becoming eligible, the delinquent account must be brought current, paid, or otherwise satisfied, or a satisfactory repayment plan must be established between the borrower and the federal agency that's owed. Fact number 25. In community property states, FHA requires that the debts of the spouse must be calculated in the borrower's debt-to-income ratio, even if he or she is not signing on the mortgage loan. For this reason, FHA lenders will pull the credit report of the spouse. Fact number 26. With some limitations, FHA loans are assumable. This means that a new buyer can take over your existing FHA loan payments, releasing you of all liability for the loan. The new buyers need to be creditworthy, of course, but it's a great way to sell a home, especially if your present FHA loan has an attractive interest rate. Fact number 27. FHA allows for sweat equity to be used for down payment. Sweat equity can be in the form of labor performed or materials provided by the borrower before closing for the home being purchased. Of course, the lender must document the value of the labor through either the appraiser's estimate or through a cost estimating service. Fact number 28. FHA loans do not carry prepayment penalties. The entire loan can be paid off early, or additional principal payments can be made at will with no restriction. Fact number 29. FHA loans carry additional restrictions when the home being purchased has been owned by the seller for 90 days or less. In these instances, additional data will be required to support the resale value of the home beyond just the FHA appraisal. This often means a second appraisal is conducted which the buyer cannot pay for. Fact number 30. FHA loans can be funded for manufactured homes, commonly known as mobile homes, which were built after June 15, 1976. The loan can be used to finance the cost of affixing a home onto land purchased separately. Alternatively, the loan can be used to purchase a home that's already permanently affixed on land. Fact number 31. Under certain special circumstances and with the right supporting documentation, FHA loans can be made to buyers who completed a short sale on their home even 1 day ago, as long as the loan involved in the short payoff was not an FHA loan. Fact number 32. When a home is being inspected during an FHA appraisal, the utilities such as water, gas, and electric have to be turned on so the appraiser can confirm they are in working order. Fact number 33. FHA loans can be used to buy newly constructed homes from builders, as well as standard resale homes, short sales, and bank-owned or foreclosed homes. Fact number 34. FHA loans have a streamline feature whereby after 6 timely payments, the existing FHA loan can be refinanced without full credit or income qualifying and without an appraisal to a lower rate and payment. Fact number 35. Unlike for conventional loans, FHA loans still require mortgage insurance if the buyer puts down a 20% down payment. Most buyers with 20% down, unless they have credit issues which pose a problem, are better off going with conventional financing. Fact number 36. Even though FHA has its core guidelines, lenders can impose additional restrictions depending on their particular investors' likes or dislikes. For example, many lenders will not finance on manufactured homes, and yet others will not allow gift funds below a certain FICO score. These are known as overlays, and buyers are encouraged to check with their lender on specific overlays. Fact number 37. FHA loans can be used to pull out some of the equity in a home, also known as a cash-out refinance, up to 85% of the value of the home as appraised by an FHA appraiser. Fact number 38. When underwriting, an FHA underwriter can eliminate the monthly debt for debt ratio purposes if there are 10 or fewer months of payments remaining. Fact number 39. FHA loans can be completed for borrowers who only have fixed income such as Social Security or veterans retirement, for example. Payroll income is not a must. Loans can also be offered for borrowers who have other types of income that are non-payroll, such as regular child support, spousal support, alimony, etc. Fact number 40. By rule, someone cannot have 2 FHA loans at the same time when both involve the borrower occupying the home as a principal residence. One of a handful of exceptions that applies is if there is a dramatic and sudden increase in family size, which can be well documented, requiring the purchase of a bigger home.